Hey everyone, this is Mark Treichel with another episode of With Flying Colors. I am joined today by three of my team members, Todd, Steve, and Dennis. Gentlemen, how you doing today?
Doing well.
Good.
All right, in case there's some new listeners that have stumbled across the wonders that are the With Flying Colors podcast that haven't heard you before, let's give your elevator pitch of your background at NCUA and or credit unions. And let's start with Steve this time.
All right. Yeah, I sum up my career in NCUA and with credit unions really into three separate parts now. The first part was just as an examiner and a problem case officer, which I did for probably a little over 10 years. And in that worked on the West Coast, and most of that was as a problem case officer. And in that dealt with a lot of resolution of credit unions through mergers, assisted mergers, and conservatorships, and all of those types of things. Then I followed Mark to the central office and worked remotely in the Office of Examination and Insurance and Risk Management for at least another more than 10 years there. And that I really enjoyed that job because I got involved in so many of the kind of national issues affecting NCUA. And my duties were really great because one of my calculations was dealing with how much should the NCUA reserve for credit union potential failures and losses. I got involved in the corporate resolution, and then towards the end of my career, I spent a lot of time on the risk-based capital regulation, but really diverse topics and a lot of interesting people within the industry to work with. Then post-retirement, I spent a stint as working in a conservatorship as a CFO, and then started with Mark, and then we've been able to continue to take what we learned in all those years at NCUA and help credit unions, mainly with their communications with the examiners.
It does come about down to communications a lot, it seems, just like life. Hey, Todd, you're up next.
Okay, I spent 34 years with NCUA. It's interesting. The first 6-7 years, I was actually a parallel path with Steve as an examiner and a PCO. We worked for the same SE initially. We worked for the same director of special actions. And then we detoured. Steve moved on to other things. I stayed in the examiner's corps a little bit longer than him when I had children. So the first 10 years, I was basically an examiner, problem case officer. The next 10 years of my career, I spent it as a regional capital market specialist in the Western region, kind of one of the more complex regions. During that, I got involved in some of the corporate stuff too. Steve and I think we wrote one of the first reports for Mr. Friesel about how much risk those corporates pose to the agency. And then you drugged me into West Corps for my lost year. I call it my lost year because I wasn't allowed to talk to anyone. I spent a whole year at West Corps working for you when you were the agent for the conservator. And then the last 11 years of my career, I was a director of special actions in the Western region, supervising problem case officers, regional capital market specialists, some regional lending specialists. Unfortunately, closed more than a few credit unions at that last recession. Also, I was involved in a couple of conservatorships that were returned to the members. So those are highlights of the career. It's always nice when you can conserve a credit and give it back to the members and know that those credit unions are still there today. I think I retired for maybe 2-3 months when you came through Billings and said, hey, want to do something in your spare time? And so I've been helping you ever since. That was in 2021. So we're coming up on 4 years of that, Mark.
That's crazy. Yeah. And Steve and I have been at it almost 5. And I tell you what, time flies, guys. And Dennis, the newest team member to our group, but I've actually known you just a touch longer than Todd and Steve. Got to provide your background.
Yeah, I'm the newbie to Mark's group here, but I've known Mark for probably about 38 years. That's the time frame of my career with credit unions. My first 6 years were actually with NCUA as an examiner and a problem case officer, very similar to Steve and Todd. But after 6 years, I decided I wanted to go on the other side. So I jumped ship from NCUA and for Ideal Credit Union. Back then it was Postal Credit Union in St. Paul, Minnesota, and worked for them for 32 years. I just recently retired about a year ago, and in January, I stayed in contact with Mark throughout the years, good friends as well. And he asked me to jump on a call here and there. And so that's where I got connected with Mark's group here. My 32 years at the credit union, we were about 100 million in assets.
Basically, then through organic growth for the next 32 years, we worked our way up to about a 1.1 billion. Retired there as the chief financial officer. Had a great career. It was fun. I loved my job throughout my 38 or 32 years. Worked in various aspects of the credit union. Started as a VP of operations, but basically grew as the CFO through that period of time. Had risk management report to me, obviously finance, accounting, and IT. A bunch of different areas that reported into me throughout that time.
Yeah, we've all been blessed of almost having 40 years of working in credit unions one way or another. And it was luck that brought me to it, and probably some of you as well. But it's really enjoyable now to be able to look at what we used to do and what's happening at NCUA, et cetera, et cetera. And in that regard, there's not a lot with only one board member, and with the Trump administration saying we don't want new regulations and we don't want new guidance and things like that. There's not as much coming out from NCUA at this time, but they did come out with via their NCUA Express. And by the way, if you don't subscribe to NCUA Express, you can sign up on NCUA's website, and they'll alert you when new things come out. Some of it's mundane, like this person was prohibited. Some of it's meaty when they come out with a new letter or a new regulation. And what they did recently was they came out with a reference to a new webpage called Tips on Starting an Exam Efficiently. And it was interesting because we have had some conversations with some credit unions recently where there seemed to be a lack of efficiency. And Steve, you mentioned communication and how important that is. But we've seen some signs that showed us that things might not have been working optimally. And it appears that some feedback has gotten to NCUA through the reporting back system, the post-exam survey. Yes, thank you. The post-exam survey, if you will, that things could be done better. So there is this page out there, Tips on Starting an Exam Efficiently, that we thought it'd be good to chat. With that, there's how we used to do it. There's how they're saying it needs to be done now or recently. There's the things we've seen client-wise. And Dennis, from where you sit, there's things you probably did to prepare for an exam. But I'm just going to throw it out there. Who wants to take first bite on this apple of how to start an exam efficiently?
Let's go ahead and start with you, because you have experience on both sides a little bit and know a little bit more about merit than I would.
Well, I got some training on merit. I retired right before they implemented it. It's somewhat interesting. I think a lot of what's coming out of this, it's because of COVID. NCUA is moving more and more off-site. What we're seeing with our clients, and they've expressed it to us, that pre-exam requests for electronic documents are growing ever larger. And in the past, there's been some guidance laid out to examiners and EICs, but things have done very informally in some respect. Their exams have always had a standardized exam request, but you've always had specials. I know even when I was a capital market specialist, my list was a little different than other specialists. Sometimes I almost always sent them to the EIC, but sometimes the EIC would say, hey, go ahead, send it right to this person at the credit union. So there was different protocols being followed by different people, even though it was always the EIC's responsibility. And we heard it from our clients. They refer to it in this letter that
We got some feedback coming from Dennis. I think your dog might be chewing up.
Yeah, he scratched. Sorry about that. I'll put myself on mute for a second.
Okay, very good. Todd, go ahead. I'm sorry.
now I got to get back to my train of thought. So anyways, a lot of credit unions starting to complain, hey, they're getting duplicate requests. Like I said, the specialists all have separate different little flavors for what they want to ask for. Sometimes those are going directly to the credit union, not through the EIC. NCUA has got 3 different ways where examiners can, or credit unions can provide their information to the examiners. They can do it through the merit survey. They can do it through NCUA secure transfer portal. They can do it through their own facility or secure file transfer portal. And it's pretty clear, this letter makes it clear too that it's the credit union's choice on how they do that. So 2 of these tools are NCUA's. Credit union can use their own tool. It's interesting when you go through their National Supervision Policy Manual, some of the things that the credit unions have to provide, CTR, SARS, things with personal information, they're not supposed to send those through merit. They're actually supposed to use the secure file transfer portal or their own. So You've got some differing standards for different types of data, but it's always the credit union's choice. And I think you read through, and we just had a client go through this. If you use NCUA Secure File Transfer Portal, and we have clients that like to do it because they can see what's been downloaded by the examiners. And this probably came out in their exam survey. We've seen this with clients. They provided thousands of documents and the examiners don't even download and look at all of them.
And then they say, hey, you didn't give us this. And it's, no, you've had it for a month.
Yeah, I'm going to defend NCUA on that one a little bit in just a second. But you have to, if you're a credit union, read through your choices, read the instructions. We just had a client that did things through the secure transfer file portal and the examiners couldn't see it. That can only happen one way, and it's pretty clear in NCUA's instructions how that can happen and what you shouldn't do. And maybe our client did it. I'm going to defend the examiners and maybe asking for documents that he can't always get to or don't always give to you a little bit. NCUA, they recently in February, they changed their exam schedule. They made that public. What they didn't make public is they changed their NSPM2 for code 3s, 4s, 5s. Those guys are no longer under 90 days. They're under one contact between exams for 3, 4, 5s. That's brand new, and they put that in the NSPM, and they didn't really make that public. And I didn't notice it until I was looking at the NSPM as part of this letter. So when I was a problem case officer and when I was a director of special actions, you'd lay out, you'd have these 3, 4 contacts for credit unions. You have this many resources for this content. It wasn't uncommon for us to ask for extra things. And if we had time to look through those and roll those steps over to the next contact. So we would do that occasionally. If resources are available, we could look at more stuff. So sometimes we would ask for more stuff than we knew we could get through, with the idea that, hey, if the exam goes smoothly, we can look at more stuff. It's less to look at next time we come. So there is the NCUA side of that. Now, with our clients, I don't think that's happening in all cases. I think they're just going overboard because everything is off-site nowadays. You're not on-site. There is a fourth way for examiners to get stuff from the credit unions, and that's to use the credit union's VPN. That requires extra steps through NCUA's help desk, or one stop, I guess, what they call it now. I don't think NCUA really just encourages that. I've done it personally in times when we're like going through an entire commercial loan portfolio to price it for P&A action or something of that nature. There's a whole bunch of rules the examiners have to follow if they get on the credit union's VPN. They have to get off of NCUA's. And I don't think that happens very often, that fourth way. Most of it, it's the secure transfer portal, or it's the merit surveys, or it's the credit union's portal. And it doesn't talk about this in the letter, but I do know with a lot of state contacts, a lot of the states have portals, and NCUA will use the state's portals for documents when the state is in charge. So there is a couple other ways not mentioned in this document. It's just interesting nowadays with the PII, how they have to formalize all this. Before there was ever even a formal process, Steve, you and I, we were getting documents from credit unions electronically way back in the 1990s, before NCUA even envisioned it formally. So it's been going on for a long time. I just think now as NCUA, we see this with our clients, there's more and more stuff off-site. So those electronic lists are getting longer. And obviously there's issues in the process along the way that's happened more than once, or this letter would not have been issued.
Exactly right. Steve, Dennis, anything you want to add to, anything you'd like to add or respond to? I've got a couple things that Todd triggered that I'll mention, but I'm gonna let you guys chat first.
So I fresh off of working at the credit union, so this is still pretty fresh as far as an exam process. We use NCUA secure file transfer for uploading our documents. It becomes a little bit of a challenge for credit unions to manage the process today. We dedicated one individual sort of as our contact, our VP of risk management, to handle basically working with EIC from NCUA. But where it gets to be a challenge is just the pure number of examiners that are involved today. particularly with all the specialists. So I think on the last exam, we had 16 or 17 different exams. We're a state chartered credit union, so that might be added to the total, but that's a lot of different individuals to be able to manage. So you got to have a pretty solid process in place in order to try to make it as efficient as you possibly can. So our approach was to have a single point of contact on our end, and that's where everything went through. So any request went to that, our VP of risk. And then from there, she distributed those requests out to the subject matter experts at the credit union. And that seemed to work pretty good. Where it gets really challenging is, right, NCUA provides the list up front. Generally about 4 weeks. We'd like to have it earlier if possible, but right, it just allows us to spread out that workload, because usually the initial list, there's like over 100 different types of requests that they're asking for. So it takes time. So our credit union folks might be going through another, like our year-end audit, or there's other things obviously going on. So the more right up front that EIC can scope out that exam and provide that information as to what they need, the better. That just gives us more time to formulate and put that all together. But then where it gets to be a challenge. So for example, I think the last exam, I think there were well over 100 pre-exam items. But then during the exam, like that 2-week period that we have an exam, then there was probably another 60 or 70 items that were requested. And again, during that process, we always ask those examiners to go through that one point of contact, and then we distribute it out. So that's where it gets to be a challenge. And then a lot of times, I think it was mentioned that the examiner said, like, we don't have that, but so then we're wondering, are you actually looking at what we uploaded to the portal? But generally, that didn't happen that often. It was just that 2-week period where all of a sudden you thought you provided most of the information, but then during the exam, then all of a sudden you get this big request list that may be coming from 13 or 14 different examiners at the same time.
And they could ask for something similar, and then you get this version of what they asked for, this version, and all of them deal with loan trial balances, but one of them might have one different. So then you've got someone who's got to track all that down and say, did we give you what you wanted, or did we give it to you 3 times because you added one element?
Yep. Or policies, right? Everybody puts their policies together a little bit differently from credit union to credit union. And we provided them all of our policies, and they're asking for that policy. We've already provided that. It's in this area. But overall, our experience has been generally good. It's just, that 2-week period of time, our VP of risk, that's pretty much her full-time job during that period of time, is just dealing with the examiners, establishing meetings, right? There's meetings that need to happen. So we had this individual make sure everything was coordinated. There wasn't any duplicate going on. So we just have one person. I think that works the best for us. And it worked the best. That one person's quarterback, that process for us.
We've had, Steve, I will let you comment on everything that's been said.
Mine, I just had one more thing I was looking at on the NSPM section on notify credit union of exam contact. It talks about that at least 4-week notice. And Dennis, you're pointing out how important that is. The other thing they have in the paragraph on that exam staff, do not need credit union approval to schedule an exam, but whenever possible, the NCUA should reach agreement to minimize disruption to the credit union and to ensure critical staff members are available while examiners are on site. And I think the exam, it seems like the scheduling is not as flexible as it used to be, and we do hit that in that when they're scheduling exam during some of the holidays, like the recently one on the 4th of July, certainly you could have critical staff members that have long planned vacations during that period way before they were notified by NCUA. And I think that's something that might come up, and the credit union just needs to be upfront in that with here's staff that's had long-term thing and they're critical. They won't be here because let's make arrangements to do what we can for that. I'll ask for Todd and Dennis, any other statements on that?
Yeah, I think that's important. I was talking to our VP of risk. We have our year-end audit and our NCUA. Yeah, we normally had it at the same time, year-end. It's always coordinated. So she doesn't take any vacation from January to the end of March. She just blocks off her calendar knowing that, we're going to have a year-end exam and we're going to have a year-end audit. But I think that is hopefully flexibility on the part of NCUA that, yeah, if there are some key people that are going to be gone during that time, that you can work with NCUA to try to reschedule so that critical person can be part of that examination.
A couple general thoughts tied to all the different things that hope I wrote some things down, hopefully, so I didn't forget where my train of thought was at. But we had a client recently that had 3 different EICs announced within a 1-month period and 2 different exam dates. And it went from, it was originally charted out as X, and then actually was 3 dates, and that was pushed back, and then it was moved up before it was ever done. So as you're trying to figure out how your people are going to be there, but NCUA, in an NCUA staff defense, there's a lot of chaos because you've got people who have left from the buyout, you got people who are going to be leaving because of the buyout, and you have the mayhem that causes to any form of scheduling. So they're in chaos, which makes having that gatekeeper in total control that much more important, because more than ever, the good communication is falling on the hands of the credit union to be communicative or over communicative, because NCUA, again, has resource challenges that are driving a lot of some of the things, probably driving why this thing had to be reissued as a web page, if you will. And Todd, something you said perked up my ears about 120 days contacts, how they seem to have slipped that into the NSP. They made it public without making it public. Makes me want to go and scour, what else has been changed. But that reminds me of a quote that I used a lot when I was at NCUA, which is, before you take down a fence, you should understand why that fence was put up. And the fence was put up to have 90-day contacts for code 5s, 120-day contacts for code 4s, 180-day contacts for code 3s. We talked about how we've all been involved in credit union for 40 years. Either around that time we started or before that time, NCUA is staffed up so that they could do follow-ups on credit unions that were having more challenges. And the reason links back to what Steve was talking about, being involved in how you determine how solvent the insurance fund is and what the losses are. It won't happen today and it won't happen tomorrow, but if code 5s and code 4s only need 1 contact instead of 3 or 4 because they're wanting to comply with their own internal policies. And oh, by the way, Hauptman 2 Januaries ago said, hey, we need to do better in complying with our own policies on code 3s and code 4s. Then they watered that down so that they could comply. And I've talked here a lot about how that's the equivalent of airlines adding a half hour to their flight times to show, wow, look, we're 95% on time now. So they took that, and now they're saying you only have to have 1 contact for a code 4, which goes to the chaos that they're under, meaning it becomes that much more important for the credit union to be humming on all cylinders, because quite frankly, NCUA has all these challenges. Anything you'd like to add to that nuance of this discussion?
Couple of things. I think in the case of your VP of risk management, Dennis, who's in charge of putting things together, I think at this point in time, whoever that person is at the credit union, when they start uploading things, they probably need to be over communicative, like you said, before the exam even starts, before they even get everything all uploaded. Send an email off to that EIC. Hey, can you see this stuff? Are you getting this stuff? Because we recently had one where the credit union uploaded everything, and the examiner said, hey, you uploaded it to a file we can't see, so it sat there for couple weeks. When the examiners couldn't access it, they never checked until the first day of the exam, and then you got a person staying up till 4 a.m. trying to get caught back up. So be a little over communicative if you're the one responsible. Send that message to the examiners. Are you getting things? It's somewhat interesting. They did away with those follow-up contacts in the late 90s, early 2000s. For a year, they left it up to supervisors and regions, and as they were short on staff, those follow-ups didn't happen and ended up costing the insurance fund money. And you can see that maybe happening again this time around, because out of those 20% of people that left NCUA, a lot of them were their most experienced people too, the people that were probably best able to manage a flexible schedule and had the most experience in reading those risk reports and understanding warning signs. So it will be interesting to see how this plays out over time.
It will. It won't end well, and then they'll go through a hiring increase because there'll be a change in administrations, there'll be losses, and the IG will do reports, and Congress will look at them, and Treasury will say you need to do X, Y, and Z. That's the one thing is you always know there'll be change. The pendulum will swing. It's swinging in this direction right now. It will swing back, and there will at some juncture there'll be losses where they'll go, wow, we went in here. We normally would have gone in here 3 times. We went in here once. We went there for 40 hours, and we didn't catch the problem. Yeah, the history will repeat itself here for sure.
With the off-site exams too, everything is siloed. A lot of times, I remember when we do exams on site, people will be talking. I might be at capital markets over here, and you get someone else in the room, and you realize that's a problem. And now they're not having those little joint communications, or you're not having those discussions in the room, so that experience doesn't transfer when you've got everyone working off-site. So I think that will be somewhat interesting. I often wonder, the industry doesn't know it and we don't see this, but each year when NCUA issues their supervision priorities, they issue that minimum exam scope document. That's never been public. I haven't seen one since I retired. They're reducing these time frames. They're reducing the need for follow-ups. And it just makes you wonder, okay, what in that minimum exam scope document has changed?
Tim, you were mentioning offsite, and then there seems to be specialists. So like back in the day when I was an exam, there weren't specialists. We were all generalists. So it seems like when you're introducing that offsite exam, and then all the specialists, that just complicates the communication process for the credit union, because all of a sudden you might have the individual that's working on multiple things that can see, yep, all this information is here. Then you got the specialist working on one area on another, and there might be some crossover, but then they're asking for the same thing. So it just seems, it seems that, and I understand why they're specialists, but that seems to have maybe created a little bit more work on the part of the credit union to make sure then you're providing information to 2 people rather than 1 or whatever. So that's what I have observed over the years.
Maybe Mark will cut this out. I'll just throw up my little 2 cents and we can't say nothing. Started out with
Now I'm going to lean in.
the information security people. Then you had capital market specialists. There was a couple in the region. At one time you had 1 regional lending specialist in each region. Now I don't know how many regional lending specialists are. You can't keep track of them. There's so many of them. And then you got now, I think, BSA people and compliance specialists too. I can't even keep track of all of them. It's very difficult for EICs to monitor all these specialists because all the specialists are higher grade than the EICs most of the time. And I'll be honest, some of these specialists, they're like little prima donnas. They don't like to follow instructions. They all want to do things their own way. It creates a huge challenge for the EICs to manage all of that. And I don't know, I suspect with the 20% of the staff that left NCUA, a lot of them probably were specialists. And maybe they will rebalance this because I think they just got to the point where there was too many, especially lending specialists. You should expect a principal examiner to do most of it, especially the loan reviews. But yeah, the number of specialists creates challenges. It's hard for EICs and SEs to manage them because, like I said, they are higher pay grades. EICs are expected to listen to them other than when the specialists get carried away, then the EICs are not supposed to listen to them. And it creates lots of back and forth with the specialist supervisors and the SEs. It's just a dynamic that is somewhat interesting and hard to manage. And like I said, there's a lot of them out there. And in my experience, a lot of those specialists are somewhat prima donnas. They want to do things their way. And some of them can be somewhat difficult to guide and direct. And it's a real challenge for EICs. A grade 12 happened to rein in a grade 14 specialist who wants to do things their way.
And it can be a grade 14 that says this should be in a document resolution or this should be an examiner finding, and then they move on to the next exam. And the examiner in charge, in theory, isn't as educated or isn't a specialist, isn't the higher graded. And you can get into the whole dynamics of what will be in that final report. And then obviously it goes to the supervisory examiner who can be that first level of arbiter. So the specialist system creates opportunities, and if left unchecked, it can create some challenges. And then if you think about, Todd, you touched on maybe they're going to kind of rethink what's going on. And I do believe they're in a big mode of reinventing NCUA. I've heard that from good sources. I've heard that they're not necessarily as inclusive as you might think they should be on how they're doing that. So I'm curious to see what does come out relative to that. And I'm thinking about originally having come from Minnesota. The Minnesota Twins are in a rough season right now. And we're recording a podcast. I listen to sports podcast, and the Twins at the deadline traded 10 of their 26 major league players. They traded their 5 best relief pitchers. They traded their starting shortstop by eating part of his contract. And so they've got 38% new staff coming up from their AAA club who, some of them are, and by the way, they traded all these guys, but only one of the people they got was ready to come to the major leagues theoretically right now. So they're taking 9 guys from the minor leagues, moving them up to the big leagues. One of those guys was named Player of the Week last week. Another guy's 31 years old. He can play all the infield positions. He hit his first home run 2 days ago. And it's creating these opportunities for these folks from the lower levels to come up. And that's what's going to happen at NCUA. There's a lot of talent leaving. They're going to have some hiccups in the road because there's going to be some corporate knowledge that was left. But they were also married to some old ways of doing things because that's how we've always done it. So that it's going to be 2 steps forward, 1 step back, in my opinion, at NCUA. But there will be stars and superstars and new leaders from every level of NCUA, people who may have only been there a couple of years who are now being tasked with doing more things. And they're going to grow. They're going to make mistakes. You need to have the freedom to make some mistakes. But when that pendulum does swing, maybe they'll get a little bit better control under some things. And maybe that will be a little bit better control under the specialist. But something good will come out of all this chaos. It always does. There'll be some losses that will come out of this newly revealed change to their exam cycle. But yeah, interesting times for sure.
You, Steve, myself, we were hired as a rebuilding thing right after NCUA lost a third of their staff under Callahan.
Exactly.
And you get a chance, like Steve and I, just months out of training, we were in charge of Code 4 crediting. They don't let, people do that for 3 or 4 years now. When we did it right away, you learn a lot when you're forced to. And some of that will go on again at NCUA. Like I said, it will be interesting. NCUA doesn't release regional org charts. It'd be nice to see one before all the retirements and then see like next one on January 1. Where are all the people?
It would be.
Compare. None of that stuff is ever public, so we won't get a chance to do it, or it's historically never been public, but it would certainly be interesting to see how they play out this reorganization because they lost a lot of executives at supervisor.
Oh, yeah.
Some regions lost a lot of supervisors. Some regions didn't. So it's different in each region too, the way the impact is. And the NSPM was set up so all the regions are run uniformly. And now the way they have to triage this, it's going to have to be some slight variations amongst the regions unless they make people move around because the people that left are different in each region.
No, you reminded me, and Dennis, you might have some thoughts to this. When we started, when I came on and I got out of training, I think I had 4 or 5 months on. We had a new SE group. Dennis had been on 3-4 months more than me, and he was the second in seniority in our group of 10 examiners. I was third, and then there were it was one guy, Leon Handrick, who had been forced to move under the Callahan administration from Denver to DC. And he said, no, I'll take a principal examiner job in South Dakota. He trained Dennis, and he essentially was the trainer and the leader of all of us young folks coming up, dealing with Code 4s and Code 5s far sooner than the policies allowed. And we learned a lot. We learned a lot quick. It was like drinking from a fire hose at times. But that's what's happening right now at NCUA with these changes. It'll be happening this year. It'll be happening next year. And they'll come away stronger in some ways, but there will be some hiccups, which gets back to it's incumbent upon the credit unions to communicate well with NCUA while they're in this being reborn like the Phoenix.
So I got a question from your guys' perspective from at the start of an exam. So there's the EIC, and you mentioned generally the EIC is probably going to be at I don't know, 11 or a 12. And then, so then you got specialists that are 14s, grade 14s. Do they coordinate before the exam anything, or does the examiner in charge simply send out the canned list of here's the 100 items that we normally request? It's not necessarily fine tuned. And then when the specialists show up, they then request their own. Is that generally how it
The
works?
specialists are supposed to send it to the rest or to the examiners ahead of time. So here's how it worked in our region. The SEs would go out to the specialist supervisors. It's okay, I need a capital market specialist. I need a couple lending specialists. Those used to be called DSAs. I think now they're creating new specialist supervisors and different titles. They would make that assignment. In the Western region, each of the specialists, they had a request list that they created. So like the capital markets specialist had a uniform one. It was in our regional instructions, so the EIC could just pull that out, ask the capital market specialist, anything you need to add to this one. Same with the regional lending specialists. I think the information securities officers, they had a couple of different ones, but that's incumbent on the specialist to get that list to that EIC well ahead of time. Depending on the region, some of these specialists, their schedules were filled out 6, 7, 9 months, a whole year in advance. As a supervisor, I typically only kept it at 3 months because I wanted spaces if problem cases came up. But didn't want to have to go to an SE and say, oh, you lost your specialist. I'd just rather delay for 2 or 3 months before I'd assign them one. So there is little differences on how supervisors handle it, but in all cases, the EIC should have the specialist request list long before they send their, and they should be bringing that in.
I just don't. Yeah, I don't think that's happening, because I just looked at, like, the VP of risk sent me the most recent exam information she provided, and I just looked at the request list, and so I was looking, okay, what kind of IT information did they request up front? There was only one item and had to do with the disaster recovery. So I'm assuming that there was a specialist and then that those requests came in after they showed up during the exam. So that in and of itself creates a lot of inefficiency for the training, because there's a lot of information IT is going to provide. And if you don't know, it probably can be predictable as to what's going to be asked, but it'd be great that a little bit more coordination up front with that EIC and the specialist to try to get as much of that information in advance of the exam as possible, rather than just all of a sudden they show up and we need this and this. So then that creates those 70, 80 other items that I was talking about that just fills up that 2-week period. And that's all that's going on, is communication then between the subject matter expert, our quarterback in charge, our VP of risk, and then the potential examiner. So
the information security one is somewhat different. They have different exam scopes they use at different exam cycles. So it's a 2 or 3 year cycle. So the information securities officers, the requests are going to change from year to year because they have a cycle of different scopes that they follow. And then what you find with them, even more so than the regional lending specialists, is there's a wide variation in their skill sets of the information securities office. So some of them have a really deep background in payment systems. So they tend to weight that information security towards payment systems, where others got a deeper background within their network security and things of that nature. And that flavors their request list a little bit, and they play to their strengths. And then, like I said, they do have rotating exam, or they used to have a rotating exam scope for the information specialists. So this year you get this form filled out. This year it's this exam scope, a different kind of scope that they use. So there's more variability with the information systems officers than there are others. And then, of course, the compliance exams change, but those are usually telegraphed with the supervision priorities. They usually tell the whole industry this is where our focus on compliance is going to be. But even then, the examiners have a little bit of flexibility to follow up on prior issues. The lending stuff, there's not really a lot of reason for those lending specialist request lists to be varied from year to year the way they are. And certainly with the regional capital market specialists, those shouldn't change very much. Like I said, in the Western region, we had a standard one that all the capital market specialists use the same request list. The states really wanted that. The state supervisors, they get frustrated when NCUA specialists provide different lists. So in our region, in the Western region, with a lot of the states, we had agreed upon specialist lists that were given to the state supervisors ahead of time. So if the state supervisors know we're getting capital market specialists, we have this list. If they're getting a regional lending specialist, we have this list. But I don't know how other regions and other supervisors handle that. I assume they have similar things, but don't hold me to it. And I retired in 2021, so I don't really know if that same stuff is going on today in 2025.
Very good. Very good. Guys, any last thoughts on this topic before we wrap for the day?
There's so much. Sure. I just had one other thing I thought I'd
Go for it.
bring. Yeah, there is the survey questions in that they were provided in this document here. And I'm just curious again, how this really plays out, because I never really saw this play out. And the question was, examiners reviewed the annual audit, internal audit function, and the supervisory committee activities, and indicated, I would assume to the credit union, the extent to which they relied on these in arriving at any examination conclusions. So I know that, and I know that's being probably done, but I never heard that being communicated back to me as the credit union. I'm just curious, is that actually being done or not out there? It should be. I think it would be great if that actually was being done. I'm just curious if it is.
It depends what's in that minimum scope document. At the state of the time when I retired, examiners were required to go look at those supervisory committee internal work papers from your external CPA. They had a catch-all. If I've looked at the CPA's work the last 5 times, okay, I can skip it here and there. But in theory, they were supposed to look at that and have that conversation with their supervisory committee chair. Generally, okay, would they say you did a good job with that external audit or not? No, usually it would just be an exception type thing where they might say something to you as a CFO if they found exceptions with that.
Yeah,
You were supposed to be looking at them all along for years.
but it'd be interesting too. Other internal audit functions or risk assessments that credit unions do. We had a huge amount of internal audit work that we did, a lot of risk assessments. A lot of them dealt with cybersecurity and security. I was curious how much examiner might rely on some of that information or review that information to maybe better scope up or scope down the exam process.
I think it's a time resource thing, Dennis. Like I said before, NCAA, we'd ask for things, and me and my staff, we'd ask for a little bit more because it's like, what are we going to dig into? Some parties, you might go to the internal audit, go through minutes, look at reports they had, have a 5-minute conversation with them on their scoping. Other places, and I did this with newer people, that when I was training people, I'd make them dig deeper into that whole internal audit and risk management process just for learning and sharpening their own saws, what is going on here. But it becomes a time and resource thing. And now here with NCUA losing 20% of their staff, you might have the initial reaction, they should spend more time with internal audit. I think the reality is they're going to spend less time with internal audit because, you need to get that loan, what's going on with credit risk, what's going on with interest rate risk and liquidity risk. Credit risk is always going to be their biggest one. They can't really leave that unattended. That causes most of the losses to the fund. Fraud creeps in there from time to time, but in general, most of the credit unions that NCUA suffers a loss on, it's because of credit risk. And high credit risk, it creates liquidity risk problems. So while you might think, Dennis, it's like examiners could be more efficient if they spent more time with internal audit. I think with the shortages in staff, the reality is they're going to spend less time with internal audit.
That whole topic is quite interesting. And a checklist type approach encourages compliance, because if the question's here and I have to say it, theoretically, I have to do it. And if I have to have that conversation, part of why that's in there is to raise the bar internally at NCUA, going back to what Todd said about there was a focus on making sure that they did look at it. And internally you build that, and then you ask in the survey that it is being done, and then they can measure over time. In 2021, 99% of people said, yes, it was done. Then it goes to 98, 96, 94. They can see internally there's a trend that maybe that's an issue. Hopefully that there could be some of that behind all this, but it's a point well taken that that's a great resource for NCUA to rely on But will they be able to now with everything that's going on?
But now with this survey, there'll be a little bit more visibility onto whether or not those questions or if that's
Exactly.
actually communicated to the credit. Either they are or they aren't. I think the examiner then needs to state that up front at some point during the exam that it wasn't done or it was done.
No, this is NCUA. They sent the surveys out to third parties. They used to come internally into the office. I'd be on details, man. I'd pick up our region's box and go through those surveys myself because they were in a room. This is where they went. Someone compiled them once every 3 months or 6 months and sent the results out to the regions. But it was actual NCUA people were looking at it. Now they've hired a third party to collate that. And will you get the same flavor and will they learn the same amount looking through those surveys? I'd learn a lot. I'd be on detail and I'd pick up, like I said, I'd pick up the stack of our regions that hadn't been compiled yet and I'd flip through them and I'd look at the questions and comments. And you're losing that now that they're moving that whole survey process to an external third party. It might be more independent. If you're not seeing the actual documents, will you learn as much? And I don't know the answer to that question. I suppose it depends on the quality of that third party. But NCUA, a couple frauds that way. We fired a couple examiners that were making up exam reports.
I know one of them.
Exam surveying. Wait, we didn't know.
I was in new examiner training with one of those guys back in 1986. And you just reminded me of the conspiracy theory that the NBA had that when the New York Knicks won the lottery and got to pick Patrick Ewing, that it was an inside job because they wanted the New York team to be good. And then they decided to go external and have a CPA firm with all the bouncing balls. It's external, which makes it more independent, but it creates other issues. Okay, so I got to do an NBA lottery draft reference. Minnesota Twins trading 38% of their staff or their team members to create new opportunities for the youth in the Twins farm system.
Yeah.
This is my favorite podcast in a while, guys.
They did it to save money so they could sell the Twins.
This wasn't done in 20 minutes. And
Yeah, and Dennis, I don't know if you saw it, but the poll ads have decided they're not selling. That came out today.
Oh, did? Oh, no. That's not good.
no. It's just
Exactly. But hey, we got the Vikings. We got hope with a new quarterback. All is good in the Minnesota sports. The poll ads are keeping the team. They got young guys playing, and the Vikings are going to go 17-0.
That's what we say every year.
Every year. Yeah.
Every year. We all have
the Steelers fan who lives in Minnesota. All right. What else, guys? Anything else?
Here's a blast from the past. My notes are on these. Remember the old, I guess I can't get it showed. The old NCUA route slips.
I love those.
I still have a couple paths of them and I still use them.
Yeah.
Scrap paper and note. I know for this is on an NCUA route slip number 1502 March 7th.
You don't have any of the goldenrod exam overviews left, do you?
No, I do not. I only did 2 exams on those when I started.
You started after this then.
I didn't know what goldenrod was until I came to work at NCUA. I realized it was a color.
I still did my reports with those when I started. You mailed them, you remember?
Yeah. Yeah, you had to make sure stuff added up then because it wasn't a formula in a spreadsheet. All right, guys, thank you for your time. Listeners, I want to thank you for listening and or watching. As always, appreciate that. This is Mark Treichel signing off with Flying Colors.